Hey everybody, welcome to Mortgage Today for Friday, July 26th, 2024. And oh, what a day it was. UMBS opened the day up 14 basis points in the first hour of trading. Perhaps it was the relatively low unrounded core month-over-month PCE figure. Perhaps it was the relatively low unrounded core month-over-month PCE figure, which came in at 0.182, is a lot better than 0.249. Both would, appear as Perhaps it was the relatively low unrounded core month-over-month PCE figure. Perhaps it was the lower incomes and outlays, or perhaps it was the fact that yesterday's quarterly numbers adequately prepped traders for the possibility of a slightly higher figure, i.e. it caused some anticipatory weakness. Either way, the bond market is easily shaking off the 0.2 versus 0.1 headline and paradoxically improving this morning. The move wasn't massive and it wasn't likely to become so, but simply avoiding losses at a higher expected core PCE reading is a victory. So that core month-over-month PCE came in at 0.2 on a 0.1 forecast. It was 0.1 previously, so it's going the wrong direction. Unrounded, though, that is 0.182, so it's on the lower side of the rounding, which we were talking about before. Core year-over-year PCE came in at 2.6 on a 2.5 forecast. It was 2.6 previously. Incomes came in up 0.2 on a 0.4 forecast, 0.4 previously. Outlays was 0.3 on a 0.3 forecast. It was 0.4 previously. For sale inventory on houses rose 36.7% year over year, according to Realtor.com. The number of active listings is the highest since the pandemic. However, it is lower than pre-pandemic levels. So while a 37% increase sounds like champagne popping number, it really isn't. The first quarter estimate of 2024. The first estimate for quarter 2 2024 real GDP came in at a surprisingly strong 2.8 annualized rate, well above expectations of at most 2% and well up from 1.4% in quarter 1. The result was due to rising inventories, strong consumer spending on goods, a rise in government spending, and weak residential construction. This reading is unlikely to alter expectations of no rate cut on July 31st and a cut on 9/18. While today's monthly core PCE headline may have technically been higher than the median forecast, the vast majority of the forecasters abstained from submitting updated guesses to data aggregators after yesterday's quarterly PCE data. Had they been compelled to do so, the forecast would have almost certainly had risen to 0.2 from 0.1, and today's unrounded number of 0.182 would be the logical beat that the market traded logically. In fact, one might call the two-day action boring, considering this morning's quick PCE-driven rally almost perfectly offset yesterday's PCE-driven sell-off, and neither was very big in the big picture of things. So UMBS closed the day up 15 basis points at UMBS closed the day up 15 basis points at 101.04. So that puts us 101.04 right underneath this Fibonacci line at the 101.2 level, with that floor that's been both a floor and a ceiling at 100.91 as support. Looking at next week, we're going to have a very eventful week. We got the JOLTS job openings on Tuesday. Then on Wednesday, we get the Fed press conference where they're going to be looking at the comments that come after it to see if they're still talking about making rate cuts before hitting 2% on inflation. That's going to be the big thing next week. Then we get ADP jobs on Wednesday, we get non-farm payrolls on Friday, and we get PMIs and jobless claims on Thursday. So it's going to be an eventful week, and everybody get rested up. And if you have a little bit of extra time, check out our core influences, especially our sponsor at thatmakesense.com.